Well, thanks everybody for tuning in today. I know that, like I said, there's a lot of choices here, and to make time to hear the Ely Gold presentation today, we really appreciate it. This is the full presentation. I think Brandon can come back on later and direct you guys to a link where we drill down on a on a webinar where we drill down onto some of the key projects. So that should be available pretty soon here, and we'll make sure everybody has access to that. So without further ado, we will jump right through the forward-looking statements, which as a junior royalty company, we make quite a few of. So why invest in Ely Gold Royalties? I think in this environment, with a lot of new junior royalties coming onto the scene. There's a lot of choices out there, and I think the main thing for us that we think differentiates ourselves is our focus. We are Nevada focused, and we are gold focused. So right now, 100% of our assets are in gold, and about 95% are in Nevada. We also have a secondary focus in Canada, where we also have a tax loss carry forward. So we have, of course, the Fenelon property, one of our key assets, and just picked up Borden Lake, and we're working on picking up a couple of more. So that safe jurisdiction is very important. We think that over the next couple of years, it's going to be a very strong theme, this idea of jurisdiction. With what we have done in building the portfolio is started out as more of a project generator, selling properties and retaining royalties for about 3 years, built up a nice portfolio of exploration and development properties that way. That's the old-fashioned way that royalties got created, when the prospector would sell his property and retain a royalty. Then about 18 months ago now, we started purchasing royalties, and because of our knowledge and our relationships in Nevada, we have been able to purchase royalties on some of Nevada's largest gold mines. We now have 3 of our key assets that we have the potential to become tier 1 assets. That means greater than 5 million ounces. We've got the best counterparties in the business. For the most part, the best operators, all the way down from Nevada Gold Mines, the Barrick-Newmont joint venture project with Newmont itself, and then all of the major operators in Nevada, and some of the best exploration companies working on our exploration and development portfolios. So from a performance standpoint, Ely has been the strongest royalty company over the last 18 months, really outperformed our peers. And yet, while we've had quite a good price appreciation, we want to point out in this presentation that with junior royalty companies, this is where you see a lot of leverage, and a lot of the established major royalty companies, when they first started out in their first few years, had stellar performance. So there's a few reasons for this, and we'll get into those in the presentation. Of course, like a royalty company, we operate with a low overhead. We just announced today in a press release that we have retained 2 individuals as strategic advisors to the board. One is Darren Wagner, who was responsible for us purchasing the first Balmoral royalty on the Fenelon project of Wallbridge. Darren also worked with us to track down the other 2% royalty at Fenelon, and provide a lot of the tenure work. And he's one of my oldest friends in the business, and really, as we're expanding into Canada and looking at more Canadian assets, Darren is the man. Then also Jason Jessup, who's actually been working with us for a couple of years now. He's Bird Dog Royalties for us and also consulted. He is more on the operations side. He's worked in underground mines. He's really got a mining engineering degree. He brought us the Jarrett Canyon PTR royalty and several other opportunities that we're currently working on. So between the two of these advisors, without dramatically increasing our overhead, we are adding some real talent here to Ely Gold Royalties. So today, with gold rising and Nevada becoming the number one mining jurisdiction, with the properties we hold between our exploration portfolio, our development portfolio, our key assets, our properties that are available for sale, we have over 100 properties in Nevada, throughout Nevada, that we have an interest in one way or another. So we really are a land bank in Nevada that generates royalties. Here's the slide what I was talking about. So shows Ely Gold Royalties in the last year, a little bit more maybe here, up about 800%. And you can see on the top is the charts of both Franco and Royal Gold, up 3,200 and 3,700% in their first 4 years in business. We really are, considering ourselves in the first year to 18 months, since that's when we've started actually purchasing, producing and near-term producing royalties. And all of our key assets have been purchased within the last 18 months. So you can see here, we're just at the beginning of that 4-year run. And of course, we aspire to being like both of these companies, and think that if history repeats itself, Ely Gold still has a long runway for growth. I talked about the outperformance. That's at the bottom of this slide is the rest of the royalty group, which some of them up over 100%. In the last 12 months, but we've significantly outperformed. And what you're seeing here is, if we point out some of the key metrics, the key drivers to that price appreciation, it's these purchasing of the royalties, the producing royalties, the VEK transaction that gave us 2 near-term producing royalties on large Nevada gold mines. It speaks again to that leverage you get in the early years of a royalty company. We're just at that point where we're doing smart, very royalty purchases, and as we're growing in market cap, we're able to do larger and larger transactions. We're up, to where today we're looking at $10 to $20 million transactions. So every transaction still moves the needle for us at this point. If we add another sound royalty that adds a net asset value, then we'll be moving the needle there. And important thing to point out, it's again, when you look at these key drivers going forward, is to remember that because we have that royalty generation program where we are selling properties and generating royalties, retaining the royalties, we have the large portfolio of exploration and development properties. So it allows us on the purchase side to keep our capital, our powder dry, if you will, only to buy producing or near-term producing royalties. We'll do a few small transactions, but on major transactions, we are looking to add to our 11 key assets and to our net asset value with a producing or near-term producing royalty. You won't see us out spending a lot of money on longer-term exploration development royalties because we're creating those ourselves. We're actually getting paid to create those kind of royalties. Here's the quick overview of the corporation at this point. 157 million shares outstanding, 197 fully diluted. All of our options and warrants are in the money. So we really quote ourselves on a fully diluted enterprise value, which, when you take our cash out and our investments and add that back in a little bit of debt, we're at about 280 million fully diluted enterprise value here. On the weekly chart, you can see down below, it's just been a very strong March, coming off of a great long-term chart here going back to 2016 with a big breakout last year, and with the accompanying volume increase, and that's one thing very important you look at with an emerging or junior company in any business, is you want to see, as that price appreciation, that the liquidity is improving, that the volume's increasing, and you can see that our volume has increased on a chart, on a graph here, almost the same trajectory as our price increase. So with our most recent offering we added about 15% went to institutions for 15% of the outstanding, almost all of the recent offering. So we brought in about 6 key new institutions. Of course, Eric Sprott is our largest shareholder and benefactor. We've got a really solid group of about 18% in long-term friends and family, insiders with about 8%, and leaving a float of around 33%. So we're really happy with what we've done in the last 2 years, really, in restructuring our capitalization here. Just quickly to talk about that again a little bit more about that leverage for the junior royalty companies. You have accretion that happens as the royalty company grows. The majors trading at 2.5 to 3 times net asset value. The mid tiers a step down, and then the juniors, really in the 1 to 1.5 times net asset value. And so as we grow, we see accretion there. We also have, with so many development assets, you're seeing natural appreciation in our net asset value every year as we get closer to the mine development and cash flow. The net asset value grows each year as it's closer and closer to the cash flow. So let's talk about evaluating these junior royalty companies. Because there are a lot of them popping up on the scene, and I think it's important that that investors look at what we think are the key metrics, growth metrics for a junior royalty company. First of all, you start out, of course, with just the business model, and where we differentiate ourselves is that we're purchasing and generating royalties. That we are 100% gold focused, no iron ore or other metals in there, just to say we have a producing royalty, and our jurisdictional focus, which we're very happy with, and so we think will become a major talking point in the industry over the next few years. Management execution of that business model, of course, is important. We've done 16 transactions here in the first half of 2020, made some major royalty purchases, and really added about half of our key assets, probably 3/4 of our net asset value since the first of the year. Improving liquidity, we already talked about, and I showed you on the long-term weekly slide. Very important, but most important is what we call the path to production. You need to look at the assets these that are projected, that are to be at cash flow. It's important, of course, to look at the project. The nice thing about doing your due diligence on a royalty company is you don't just have to listen to what we say. You can go and look at the reports and the companies of our counterparties that are actually doing the work on the projects. And so it's very important that you look at the project and say, is it really a viable project, or is it a low-grade underground thing that's got a lot of ounces but is going to take $2,500 gold to really get developed? And then, most importantly, is who's the counterparty with this asset? Is it held by a junior company that's never built a mine before, never operated a mine, really doesn't have the capital to build the mine, so that you've got a great project, but it's going to take a corporate transaction or a corporate miracle, as I say, to get that project actually off the ground. For us, we have 11 key assets, and they're with the best industry operators in the business. So let's talk about the numbers and the actual breakdown of our 100 property interests. It's actually a little greater than that, but we have 11 key assets, and a key assets for us means that they are going either in production or will be producing by 2023. As this year goes on, we'll probably look at things out a bit further to 2024. But in that time frame where we can actually put a cash flow model together on the property that we're comfortable with, and that of course that's what drives the net asset value that brings up the valuation on the stock. Then we have 20 development assets. These are a combination of royalties we've purchased in packages and royalties that we've generated. And the key to being a development asset for Ely Gold Royalties is all of these 20 properties, and it's actually up to about 22 properties now, I think. The property has to be at or near a producing mine. And what that means is that our property in this portfolio, the properties don't need to find enough gold there to warrant building a mine. The mine is already there in the near vicinity, and so our development assets, while we think there's some of them that may become standalone mines, they don't have to become large enough to warrant that capital expense of permitting and building the mine. The mine's already built. Our property will just be the ore that's found there will be used to extend the mine life and the production profile of that existing mine. We then have 35 exploration properties, exploration assets. These are mostly properties that we have generated through our property sale program. They are just what they claim to be. There is their longer term exploration. We have 8 or 9 of those currently being drilled by some top junior exploration companies. VR Resources is working on one of our properties, Contact Gold, and then BlackRock had some excellent drill results on our Tonopah property that came out this morning. I urge everybody to go take a look at BlackRock's what they found here on this Tonopah package that we consolidated for them and sold them earlier in the year. And then we have 32 properties that in our available for sale portfolio. So we're constantly doing new deals, selling properties, and in that sale program, we'll either sell for cash or over a 4-year payment option plan with escalating payments. In the end, though, we don't do any joint ventures. We sell the properties 100%, and if they make all the payments, we retain a royalty and give them the property. If they don't make all the payments, we get the property back 100%. So we don't get hung up with a good property in a bad JV agreement where the property is already split up. And also, this is a very scalable model for us. Once we've done the contract with them on the option, we're pretty much just sending them invoices once a year. We don't put work commitments on the companies. We try and get our properties to companies that are excited, and they're going to put the exploration program together, and depending on the market and depending on how it falls in their property portfolio. So all in all, that's what adds up to the 100 property interest in Nevada and the Western U.S. This slide, just take a quick glance at, gives you an idea of who we're working with in Nevada and now in Canada with our couple of assets up there. Now let's just talk about those key assets, because we talked earlier about that path to production, and this really kind of spells it out for us. We have 3 royalties that are currently producing: the gold resource, the Isabella Pearl, that is it came into commercial production last year. We've got a 0.75% royalty on the current production. We've got a 2.5% royalty subject to a 1% buy down on all the exploration ground. And that's the ground that they're currently drilling now to expand that resource. Literally, we've got about 6 miles of trend there that we sold them, retained the royalty, and very exciting. We think that asset will just continue to grow and grow onto our not only continue to pay on the 0.75%, but start to pay on the 1.5 to 2.5%. On Jarrett Canyon, this is just a great asset, owned 100% now by Eric Sprott. We have the per ton royalty that is on the mill there. It's actually on the roaster. Everything that goes through the mill, we get 30 cents a ton. At $2,000 gold, that goes to 40 cents a ton. Jarrett Canyon's currently producing at about half the capacity there, a little over of that mill, with the idea that they are currently doing exploration and mine development to get that production up. So we've got leverage both in the gold price and in production increases there. The NSR at Jarrett Canyon we purchased from Eric, that is currently producing, should be about 1.5 million that we get on that royalty this year, and then next year escalating up as they increase production there. Rawhide is a per ton, a net profit interest royalty. We think that we had estimated that to start paying this year. We're looking at have a conference call this week with Rawhide. It looks like we may be having to push that out because of some slowdowns in development because of the COVID. But very excited about this one. It for sure will be producing for us next year. Fenelon, I think most people know, this is what really launched us in the at least our market awareness. That Wallbridge has done a great job there. They've outlined now what the analysts are calling between 2.5 and 4 million ounces, high grade underground with a lot of infrastructure already in from their recent bulk sampling. And they're currently going to get applied for their small miners permit, 400 to 500 tons per day. We expect them to get that sometime this year. It was looking like the mid-year, but again, COVID delays there. But we think they'll be in production by next year at that slower small mining pace, mostly so that they can get down deeper into the new Tabasco zones and explore this from underground. Very important that the work that they did to get down 6 levels with the bulk sample, has allowed them to define the main zone there, main Gabbro zone, and do the development and resource work on that by only having to drill 50 to 100 meter holes. So we think they will mine down to another 6 or 8 levels, get over into the above that Tabasco zone, start mining that, and have the platforms underground there to explore that more at depth. In the VEK transaction that we did early this year, we got a 0.75% royalty on the Marigold mine operated by SSR Mining. Again, one of Nevada's, with Jarrett Canyon, one of the larger gold mines in Nevada. Our claims there are in the current mine plan, 43101 plan for SSR at 2022. Lincoln Hill is a very exciting asset, a lot of good development work going on out there. Coeur Mining, again, quality mid-tier producer. They are building a new leach pad at Rochester. The Lincoln Hill sits right next to the new leach pad at Rochester, and we think that Coeur is talking about that Lincoln Hill, which is a higher, about 4 times the gold grade compared to the Rochester ore, getting that onto that new leach pad as soon as it's completed in 2023. One of the projects we're most excited about, along with Fenelon and Jarrett Canyon, those would be the 3 we think have the potential to grow to 5 million ounces, is Ren. Ren is at the Nevada Gold Mines, the Barrick-Newmont joint venture, the Gold Strike mine. This is the largest gold mine in Nevada, one of the largest in the world. It's produced over 45 million ounces. About 33 million from the open pit and about 12 to 13 million from the underground. The Ren is the underground extension. They've pretty much mined that out, so they're starting to develop the Ren deposit. That just one small area at Ren was outlined by Centerra in 2010 at about 2 million ounces, and a very high grade but very deep underground, and they're just going to drift to that. They're not going to drill it from surface. They are just going to drift in, begin mining, and drift through the property to do all the further exploration. At Ren, we have a 1.5% NSR, and we are also able, from the original prospector, to pick up a 3.5% net profit interest there. Then the last 2, Hog Ranch, is with Rex Minerals, an Australian company. They're permitting that now. They've outlined, just put out a resource of about 1.2, 1.3 million ounces. And then Gold Rock, operated by Fiore, they just put out their PEA for calling for 2022, 2023 production of about 55 to 60,000 ounces a year. So when we talk about those operators and you look at this, I mean, we have 11 key assets, 9 of them, the mine does not have to be built. The mine is already there, or the mine infrastructure, and all of them, except for the Rex Minerals, which is an Australian exploration and development company, all of them are with current operators who are already operating mines throughout the world, but in Nevada. So a very, very strong portfolio when you look at our counterparties here. That slide with the the revenue here is 2 parts. The key assets as they come online between now and 2023. Those it's just those 11 on that slide that are representing the royalty revenue here. Our sales revenue, like I said, we have contracts that are existing going out 4 years. So this is what's already on the books. We tend to do some during the year as well. But right now on the books, we have about 2 million a year going out to 2023. That's nice, predictable revenue that, is a little, it covers our overhead for the most part. So that our royalty revenue, as it really starts to kick in next year in 2022, most of that will go to EBITDA and be available to start a dividend program, which we hope to initiate next year. The team, again, pretty slight. Jerry and I, the only full-time employees still at this point. We are considering maybe adding some more talent in the CFO area. Our current CFO is actually works at our accountant and is CPA. We'd like to have a guy that's a little more, has more experience in the corporate finance and M&A. So we're currently looking there. But Steve Kenwood, our corporate secretary, been with the company a long time, but works part-time for us and other companies. Joe, the same way, has other clients in investor relations. And then our outside board, very strong with Bill Sheriff, a lot of 35 years of experience, a lot of experience in Nevada. And both Tom and Ron, our board, we only have 5-member board. We don't think we need 7, 9 members like a lot of juniors do. We just want to get things done here. So we're very happy. We've got a lot of talent with the new addition of the new strategic alliance or strategic advisors. Gives us a very strong package here without but keeping in that G&A guidelines of 2 million and under. So the goals, we're going to have to, I guess, sit down and add some more goals for 2020. We pretty much achieved all our 2020 goals in the first half of this year, but we are oriented this way. So I think we'll be updating this and bringing in some more goals for 2020. That's really it. That's the Ely Gold story. To sum it up, the upside is, you in that junior royalty company beta, you get more growth, high returns in the early years. Basically, every deal we do, moves the needle. Again, it's just something that's been proved out by all of the major royalty companies if you look back historically. We're obviously rapidly growing our portfolio. That's that management execution. We've done 16 transactions total in the first half of 2020. At clear path to production, we talked about our 11 key assets. And then, of course, because we're 100% gold, we offer the best leverage to gold prices of any of the junior royalty companies. We would like to maybe diversify into a little bit of silver, but it's in most of in our jurisdictions of Canada and Nevada, the silver is a little hard to come by. Although the Tonopah project was a big silver camp, and BlackRock's drill results that they announced today had over a kilo of silver, along with a nice 10, 11 grams of gold. So maybe we've got our first silver asset there. That rising gold prices just flows right to our bottom line. Our expenses don't go up. And then the other thing about that rising gold price leverage is we're seeing increased project development. Some of these projects throughout Nevada, anyway, where we're very familiar with them, and Canada, that were kind of put on the shelf at $1,200, $1,300 gold, are now very viable. And so we are out there trying to scare up some royalties on some of these projects that we think will change hands or be brought to the table for development. So with that, we should have plenty of time here for Q&A. I see Brandon has jumped back on to go over these, and we'll open it up.
Absolutely, Trey, fantastic. I appreciate that very much. And for all of the investors in here as well, I appreciate all the different comments and questions that continue to come in. Love seeing an active and shareholder base. It's always been something that's very important to myself, especially to you, Trey, and your team. So why don't we jump right in here into some of the questions. We'll go into the very first one here, which is, hi, Trey. Ely, Metalla, and Maverick, similar market caps. All companies talk of the increased competition for royalty deals. Many analysts say M&A is coming. Question: how do you see consolidation playing out in this sector? Thank you.
Boy, that's a great question. I mentioned that we were maybe starting to shop around for a strong CFO that could help with that. We think there are a lot of opportunities. We think that we are operating under the game plan that if there's an M&A done, we would be the acquirer. So we're looking at some things. Hard to find things that are specific to Nevada and to our jurisdiction. So we're evaluating things that way. But I think you're going to see the major companies going down. You remember that slide that the major companies can buy a mid-tier and it can be an accretive transaction because they're buying assets that are being valued at 2-3 times, 2 to 2.5 times NAV, and put them in their portfolio, which is being valued at 3 or 3 plus times NAV. The same with the juniors. A mid-tier could buy a junior company and it could be accretive to their too. A major company could buy a junior and really double or triple the NAV. So there's a natural I think thing that's going to happen here. Like I said, you've seen a lot of new royalty companies jump on the scene. We don't feel the competition too strong because we own Nevada. Nobody understands it. Nobody knows the people the way we do. So we generally are able to, we're still looking at opportunities there and seeing some strong opportunities in Canada. But I do think you will see M&A over the next couple of years.
Absolutely. And thank you for answering that question there. The next one we're looking into is from Oz. He's saying, do you have any plans to diversify from gold in the near future?
Well, like I said, the thing I love about being a gold company is I don't have to make a case for the commodity. With copper, the battery metals, you're making a case of why why demand is going to go up and the price is going to go up. I've been at Ely, for almost 10 years now, and of course 5 years of that we were in the exploration and development side. And the thing I came to realize is that our shareholders, they don't, you'll never see us in our presentation say why you should own gold or how much you should have in your portfolio. Gold investors are, they're the ones on the line. So, and if the gold price goes down, I haven't made a call on the gold price. When it goes up, we're all happy. When it goes down, my shareholders don't blame me. They blame Goldman Sachs or, the central banks or other nefarious government agencies for manipulating the price down. So, we will look at silver. In doing M&A, we're liable to, by default, end up with a copper asset or something, a nickel asset, just in trying to, do an acquisition of another royalty company. But we are looking at silver. The problem with silver is it's hard to find unless you have a silver stream. The silver NSRs on silver, because most of the silver comes from a lead zinc polymetallic mine, and the companies, the offtake companies that are buying the concentrates are really screwing. You don't have the same controls on the NSR because of the way the mine product is sold as a concentrate as opposed to a doré. So, with the doré, we're only paying those few transportation, insurance, and smelting costs to refine the gold. But in the concentrates, you pay a lot of other penalties. You pay a participation penalty for, if they don't like the price of zinc, or there's not enough demand for the zinc or the lead at any given time. So until zinc prices and lead prices really firm up, and there's demand for those beyond that would eliminate some of those costs, very difficult to find silver. So, but we're happy being in gold. It's it wouldn't bother me if we stayed 100% gold forever.
Very fair. The next question here is from Garish. Forgive me if I don't say that name correctly. It's a very unique name. Any thoughts on why the stock price has not in the past month or so seen the same uptrend that most other junior and senior mining companies have seen?
Yeah, I mean, I do have a comment. I mean, you've seen, I mean, our with the outperformance that we've done, I mean, some profit taking along the way is certainly to be expected. I think, I point out this chart here where we have, with the exception of the dipping in March here with the COVID crisis and craziness, our 50-day moving average has been a very good base for us, and we've pulled back to that. I mean, the stock can't go straight up. Ours has certainly tried and done as good a job as a stock can. But look at that trajectory on the Franco and Royal in their first 4 years. And Royal, I mean, this was Royal Gold. This was all based on the drilling at the Pipeline mine. That was their only asset, really, and they bought the Buckhorn mine in here somewhere, and then they didn't even start getting dividend or royalty payments until I believe almost '96 on the pipeline. So, that trajectory is, our chart pullback. This pullback is very healthy. Right here, it's back to the 50-day moving average, and awaiting for. It's been a little quiet for us since the private placement. As far as doing a big deal, we've got a few on the burner, but they're tricky. So maybe other than our property sales on the royalty side, our news flow has been a little light here the last 30 days. So. Look, people are taking profits. They're throwing that money into a lot of the cheaper exploration and development companies. Royalty companies led the way. And I think if you look at Metalla or even the majors, our chart's been pretty much the same. They've been going sideways and consolidating, but it's the strong group. It's the group that royalty group will hold up when the market sells off, and it'll consolidate. I believe we're consolidating now, hopefully for a move to even higher prices.
Absolutely. As much as we all wish, they do not just go all one direction. That'd be very dangerous if it did. The next question here is from George. Have you made a list of new goals? Actually, we were just mentioning this, Trey, just a few minutes ago. Have you made a new list of new goals for the rest of 2020? Any interesting possible deals coming up?
Well, look, we are prolific deal makers. So, we, as I said before, one thing you can be sure of is that if we make a more major purchase of, let's just say at this point of $1 million or greater, it's going to be in something that's going to go into our key asset portfolio. And we're focused in two things there. Of course, we are focused in some new deals, but we're also looking very strongly at the possibility of adding to our positions on some of our current key assets. We know those assets very well. We're very excited about them. We know the production path to production. So that's a very easy place for us. And I think that's the first place you'll see some news. But the goals for the second half is to do a couple of more move the needle transactions, if you will. And as I said, those would be producing or near-term producing royalties, properties that would go into add to our key asset list, or expand our key asset list.
Absolutely. And this is from Joanne, but it was from an investor earlier. She moved over to the question and answers area. Is there any update with regards to expanding the research coverage and adding another broker or brokers in addition to Noble Capital Markets?
Well, like that certainly, was one of our key goals for 2020. Bringing on Noble was very important. We think Mark Reichman's done a great job for us here. We've been looking at some of the paid for research companies just to get some more eyeballs. And, there's a few of those that do very good work. So, actually, I appreciate some feedback from listeners of what they think of some of the paid for research. But as far as investment banks, I think I'm very comfortable that you're going to see at least one and maybe two of the Canadian investment banks. One is more of it's a Canadian research analyst, but it's more of a U.S. company. So we think we'll get at least one, maybe two more investment bank research coverage in 2020.
Very nice. The next one here is for yourself here. It's saying, when will Ely be re-rated higher?
Well, as I said before, there's three things that really will re-rate us. I mean, for the long-term shareholders and people who've been listening to our podcasts and my presentations for a while, that for a long time we were showing us compared to our peers. In the case of, it was like Metla and Abitibi, and just saying that how undervalued we were. And I think when we made earlier this year the acquisitions of Jarrett Canyon and the VEK Associates, and then I think Borden Lake has kind of flown under the radar, but it certainly is another one. As we've made those acquisitions and people now are looking at our key assets compared, that really gave them the ability to look at our key assets compared to others and say, when you look at that portfolio and the operators, the fact that 9 of our properties, the mine's already built, I think the word just, we finally beat it into you guys out there. That our portfolio would put it up against those other juniors any day, and you guys have finally listened, and a lot of you have really benefited, and we're very happy for that. So at this point, we're not going to get re-rated based on our being undervalued to our peers. But as our portfolio grows, again, I think you'll see more of the growth coming as we move the needle with transactions. There's a certain amount of appreciation that you're going to see in the NAV of the portfolio, as I mentioned, as we get closer and closer to the production. That's just something natural because, of course, you're discounting the time to production in the cash flow model that makes up the NAV. So, by 2023, I think you'll see probably with nothing else, just on the assets we have, an increase in the net asset value as they come online, somewhere around 15% a year. So, the other re-rating is, I think, going to come if we see a breakout and a new high in the price of gold. I think investors, and as they start to fully value some of these, what were undervalued lower end producers, and some of the more speculative exploration companies, I think we'll see more new people coming into the gold space. That's what we really saw this year: new investors coming into gold. With new investors coming in, they were very sold on the royalty model. I mean, if you're looking for exposure to gold and you're a new investor and you want to look at the equities to get the leverage, I mean, the royalty story, time and time again, it's being written up by analysts all over the street as the most conservative and leveraged way to pay the play the gold market.
Absolutely. And Trey, we've got two questions that are basically the same. So I'm going to combine them for both of these investors today. It's basically asking, how could the impact of COVID-19 affect your business plan? And are there any estimated deviations from it because of that?
Well, I mentioned a few small ones. Things have gotten pushed back. That mining in Nevada was considered a essential business from day one. You never saw any mine closures that had to happen. McEwen closed for a while, but I think I think the couple of closings that we saw in Nevada Copper and McEwen were really used the COVID as more of an excuse. They had operational reasons that they needed to shut things down for a while. So we really didn't see too much there, but it's leaking through, and obviously this COVID has not gone away. I mean it seems to like the one thing that's starting to be very clear to me is this whole thing is shutting down the economy in the first place. It didn't really help much. Maybe where they completely, gutted the cities in states like New York. I mean, with Fifth Avenue boarded up these days, maybe that'll slow down. But I think even you'll see New York and New Jersey, the ones that are bragging about their cases now, it's going to come back on them again as well as people get out and get exposed. I mean, this is clearly a virus that until we see a vaccine, is just going to have to run its course and get to the point of herd immunity. I'm kind of bewildered because I'm down here in Texas and I'm saying, okay, I mean, I can kind of see it in Florida where everybody's kind of, tucked in, where the kids were all there at spring break, and a lot of concentration in there in the tourism and people coming back and forth for vacations. I mean, Texas is not really a vacation point, and I wonder why Texas. And it appears that we shut down before the virus really got here. Is what's kind of becoming apparent to me. So, look. On the good news, and again, the reason we're glad to be 100% gold invested is that that we think as things get worse, if things get worse with COVID, the repercussions there, the stimulus, and that the governments around the world are throwing at this problem. I mean, it's all positive for gold. I mean, I hate to. I'm not saying that certainly not saying we want to see the COVID, but you're going to see inflation now. You're going to see everything that is strong for gold coming back, and a lot of it has to do with the COVID and the government's really poor way of dealing with it, I think. But anyway, let me get off my soapbox here and let's go on to the next question.
Not to worry at all.
I can tell you this, Brandon, that I hear that cases are really about to spike because they are now going to include in the numbers all of us who are sick of the virus.
Oh, took me a second there. I'm like, okay, no, I got it.
Right
over for a second, but it came back, I promise. For another question here is from John. He's saying, when are you eligible to be added to the GDXJ and other indexes?
Look, I don't know, to tell you the truth. I think that we are probably close on the GDXJ. I don't know if they require a Toronto Stock Exchange listing. I don't think so. I mean, again, this is something I just haven't, I'm not really up to date on. Being a U.S. investment guy and, an old investment banker, I'm on a lot of those things. I'm not as up to date on what the what the rules are there. Another reason why I kind of like to have a financial guy that understands that better. But I think we've got to be getting pretty close. I think that the problem is I don't think the GDXJ has a lot of the junior royalty companies in it as a rule. I don't know if Mavericks has made it in there yet, or EMX, but what I'm looking for is I wonder why VanEck or one of these companies doesn't come out with a royalty ETF or index. I think that would be I think it'd be well received, and I think would be I think it's something. If I'm going to be surprised if it doesn't happen here fairly soon.
Absolutely, there, and I appreciate your answer once again. The next question here is there any reason for not declaring a dividend in recent past? I know in past webinars and town halls we've done, you've addressed that question, but for this investor right now, not declaring dividends in the recent past.
This is a question that we answer every time, and I think at one time we had this on our goal in 2020 was to get to a dividend point. Look, I think it's important for investors to understand that in the growth of a company like for us, and with the revenue growing, for us that royalty income really starts to kick in next year. We had some things get delayed that we thought would be maybe producing this year in the case of Fenelon and the rawhide. But here's our position on the dividend. Is one, when we declare one, we want it to be substantial. We don't want to have a quarter or 0.5% dividend just to say we're paying one. Keep in mind that putting together a dividend program is expensive for a small company because they charge same rate for a big company as a small company. I mean, we have quite a few shareholders. A check has to go out to every one of them. I mean, if you do a reinvestment plan, there's that. It's all got to be handled, so it's expensive. So we want our dividend to be significant. We want it to be paid for. We don't want to use financings to pay the dividend. I think some of our peers are doing that. We want it to come from solid, predictable royalty revenue and then grow with our royalty revenue. So if you look at our growth there in the royalty revenue going out, starting in 21, going out to 22, 23, I mean, with 150, 200 million shares outstanding, I mean, it's going to take a $2 million, I think, to put together. That would be a penny royalty or a penny dividend. We need to have a chunk of money to do it. And we want it to be something that's significant and that can grow every year as that royalty revenue grows. So next year.
Absolutely. And to Jonathan and Bean, I saw that you put that question in second. I almost missed your question, so thank you for that. Thanks for the great presentation, John says. Could you speak to some of the greatest risks you see presenting themselves to Ely in the coming years? Great question.
I'm sorry, can you repeat that again? I think I must, I'm not sure I understood that.
No, it's okay. He said, could you speak to some of the greatest risks that you see presenting to your company in the coming years?
Oh, okay. Yeah. Well, look, the biggest risk is a decline in gold prices, for sure. So I think that's probably our biggest risk. Again, because our portfolio is so diversified and the quality of the players in our key assets, and we're not looking at that royalty stream starting based on our projections. These are either projections or in the mine plans for those operators. So I think again, being in the safe environment, I mean, if I could speak to just overall, like I said, I think that jurisdiction is going to become a very important point. If you listen to some of the pundits now, they think that some of these third world countries may really jack up royalties or taxes and royalties on mines, and as they're looking for ways to shore up their economies and to deal with their lack of dollars to pay off their dollar denominated debts. So I would have to say I think it's and then competition is something that's obviously you do see more entrants coming in. I won't deny that we think it's going to be we're going to be operating in a more and more competitive environment, but we think we're pretty sharp and pretty fast, and so again, you think you will be generating the transactions. So I would say the thing that keeps me up at night is a big decline in the gold prices.
Absolutely. And as it should, that's obviously one that you have no control over, but has a lot of control over the industry in itself. Just as a heads up to everyone, we are stopping all new questions for now. There are some ones that we're still going to be going through, but just know that new ones will not be accepted now. I appreciate all of these, that they're fantastic. But we'll keep going here from another one. Let's see what we have here that I haven't asked. As people are upvoting, they are changing here. Give me one moment here. Here's an interesting one, actually, just came in. Where do you see the price of gold going? A speculative question for you, Trey.
Like I said before, I'm happy to never have to make those predictions. But somebody asked me another question that got asked of me in a recent interview was what other gold stocks I personally owned. And I can honestly say since 2010, right or wrong, I have not owned any other gold stocks except Ely Gold. And today I'm pretty happy about that for a lot of reasons. Missed a lot of painful years in the gold equity markets with other companies. But what I do own besides Ely Gold is physical gold. And I can say that I've probably, for me, made 2 or 3 significant purchases since the first of the year this year. Added some silver to my portfolio just a few weeks ago. I guess that would. While I won't put a price out there. I think it's reasonable to assume gold will hit a new high before the end of the year, which would and certainly on a closing price basis, maybe not on the spike 1900 price, but quite possibly.
Very fair. We have a 2-part question coming up from Igor. I'm going to ask the first one here. Hello, can you please advise what is the plan to deploy Eric Sprott's money, and what plans towards Fenelon? Thank you.
Okay, if I understand that question, Eric Sprott's money, if they're referring to the line of credit, Eric gave us a $6 million convertible line of credit last fall. The plan when we took that line of credit was that we would have the funds available to make a large royalty purchase and then be able to time, if you will, our equity issuance, let the market absorb the news. In this case, it was the VEK transaction that we did. So the market absorbed that, the stock took off, and we were able to raise money at higher prices than we we used part of the funds from that $17.25 million financing to pay down that $6 million line of credit. So it's opened up now. And it's just waiting for us to do another large transaction, and we can dip into that. It's not due until November of 2022. 2021. And when it is due, Eric has a slug of warrants that would be exercised to pay it off anyway. So right now we've got it paid down because the interest rate on it is only 2.5% on undrawn funds compared to 10% on drawn funds. So if that's what they're referring to, as soon, we'll be dipping into that if we can execute on a couple of the larger $10 to $20 million transactions that we're looking at this time.
Absolutely. I'm going to reread a part of that question as well, because part of it is what are the plans towards Fenelon. But the two-part question was, there's another comment, same gentleman. It says, in addition, in Walbridge presentation, which develops Fenelon, stated that 2021 is not production year for Fenelon. Are you able to comment on that?
Well, look, I think what they have said in news releases was that they were getting this permit and that they were for the small mining. And while I think the market is looking for, they are going to need to make a mill decision there. The mining that they did, the bulk sample was toll milled. They had to haul that. They got like 99% recovery. So, but it's high enough grade that it worked out fine. Now, eventually they're going to build a mill there, and they've got a lot of exploration to do before they can decide what kind of mill they're going to build there. This thing could get a lot bigger. It could get bigger on both the open pit and the underground. But the exploration, and to keep driving the exploration underground at Fenelon, is going to be very expensive for them if they don't take that small miner permit and mine to get deeper underground so that they can continue to. I believe they'll want to that they will use that permit, and that they will use it with the toll milling so that they can get down another 8 levels, really start doing the development drilling on the Tabasco zone that they have been drilling now, so that they can do a real resource proven and probable, at least strong, measured, and indicated, and explore deeper underground there. Those structures there, they stand almost vertical. So drilling that deposit from surface gets very difficult. Here's the picture of what they've done here. And you can see this is the Tabasco zone over here with those great drill holes. Now, some of that they drilled from by drilling. This is the 6 levels they put in with the bulk sample, and specifically put in this drift out to where they could do exploration and be drilling back here. Drilling from surface to get down underneath here is going to start to be either very expensive or impossible. So, maybe they've defined a couple, 3, maybe I've heard maybe it's 4 million ounces in here of high grade underground. But it's going to be expensive for them to expand that deeper, and they need to expand it so that they can then make the right mill decision. I mean, should it be 100,000 ounce a day production? I mean, do they need a 10,000 ton a day mill? If the Area 51 and there's open pit 1 gram, 1.5 gram material that they build up in the near surface, that might mean they want to end up doing a combined mill that combines the underground and the open pit, lower grade, which might mean a 20,000 ton a day mill. Look, I don't know. I haven't seen it in a presentation where they haven't seen that. I know publicly what Mars Cord has said in a press release late last year, that they were applying for this permit with the idea of going in with the small miners permit, and they tried to get another bulk sample permit to do more of this, but I think they're not promising the market that right now. They're not focusing on that because they don't want people to get the idea that this is going to be a 400 or 500 ton a day operation. This eventually is going to be underground 2,000-3,000 ton a day operation. And I think they don't want the market to misperceive, but I think they will find a way to explain to the market what they're going to do with that small miner's permit. Then that is to come from here, get down over here, and get a drift out at about this level out in here to be able to explore all this underground. And if they continue to find this, and this becomes a tier one, a 5 million ounce deposit or greater, that's what'll drive their mill decision.
Beautiful. And Trey, we have, I believe, one more question. I was just searching through there just to make sure that I did get everyone's questions that came in, and it was dividend related once more. It says, would it help the company if investors opted in for a DRIP program so that dividends are converted to shares automatically? Does that change your thought process on it at all?
Well, look, either way, it has to be paid and it has to be managed. So, I don't think, I think a DRIP program should be a part of what dividend program we put together. There's other people who, not everybody wants to reinvest. So I think to put a real dividend program together, you can't confine it to just the reinvestment program. You have to have the funds available to pay it in cash if somebody wants the cash.
Yeah, no, absolutely. Well, I appreciate all the questions that came in. I knew there are some in the queue as well. If you do have any questions, both Trey and Joanne are fantastic at answering their emails as well. So please, by all means, reach out. We're going to have more of these webinars as well. We're constantly in communication with investors and with Ely Gold as well. So love facilitating this. Trey, appreciate coming back on today and taking the time from your day and spending it with your investors. I appreciate that a lot.
Well, thank you, Brandon. And can you just comment? I know we're in the kind of the final throes of editing that webinar we did, which was the drill down on all the key assets and going through, some of these slides on Wallbridge in more detail. Got to do that here in the question, but going through Ren and Marigold and all the key assets. And where will people be able to find that when we get it posted, hopefully later this week?
Absolutely. They can go on to FTMIG.com. We'll have it on there as well. On all of our socials, we make sure we're really active on Facebook. You can go to FTMIG. It's our Facebook page. We post a lot of our content in there, and FTMIG mining as well. We'll also be sending out to investors, and I'll be speaking with yourself and Joanne of how else to get it out there, because once we create content with you, we want to make sure we get it out to people. It can be as accessible as possible. So we'll be sure to have it there, but it will 100% be up on FTMIG.com later this week.
The other thing, too, I would mention is that for anybody who wants to be on our email list as well, I think pretty much you might get duped on some stuff with these guys, but you can go to our website. It's very easy. I encourage you to subscribe there. You get you get everything and invitations and just one other way to be kept informed. No exclusive information to the email list, but it's one other way to make sure you don't miss an interview or something that we're doing.
Absolutely. Well, once again, for everyone who's attending, I appreciate it very much. Once this ends as well, you will get what's called an exit survey. If you do have a couple of minutes, we'd love to hear back from you, get your feedback on what you liked about this presentation. What would you like us to do in the future? We're always trying to make this so that between Trey and his team and investors, we're doing everything we can to give you as much information, make it accessible, make it understandable. So we'd love for you to fill out that survey if you could. And Trey, just once more, I appreciate very much you taking the time today.
Well, thank you very much. And, you guys, again, you do a great job. We love this platform. I'm kind of intrigued, sometimes even distracted here because, I can see where some of the listeners are chatting amongst themselves and with different comments the whole thing with the Q&A and everything works out to be a great program for everybody. So thanks again. Thanks everybody tuning in.
Absolutely. And as I push this end button, it'll give us 5 seconds before it disconnects here, my good man. But once again, everyone, if you don't mind taking a second to fill out those exit surveys, that would be greatly appreciated. It helps us help you. Take care, everyone. Have a great day.